I'm Sarah Bryant. I'm the AVP of Regional Programs, and I also manage the stock market game program for New York and New Jersey. The voice that preceded mine was that of Vincent Young. He's our AVP of Curriculum Initiatives. And joined with us today is the newest addition to the SIFMA Foundation, Ms. Perrine Kohlhaas, who is our Director of Operations, who has a wonderful background in trading, and I hope that some of you will have an opportunity to get to know her a little bit more as she is with us, and we look forward to joining you guys today. Thank you for being with us and joining the Stock Market Game program and having a community of teachers and parents and like-minded people who are really just committed to financial literacy in the classroom. We're over 600,000 students strong every single year nationwide, and we're very, very proud of that. And we're looking for that number to increase every single year for the sake of really ensuring that we're supporting students nationwide and really equipping them to be economically savvy citizens. So today we are launching a couple of new initiatives within the stock market game, one of them being the opportunity to invest directly in sustainable companies. So before we open that up and introduce you to how to do that within the stock market game, we thought it would be really helpful to explain and provide a greater detail to what sustainability is all about. And from that, I will pass it over to my colleague, Perrine.
Thanks, Sarah. So as Sarah said, we thank everybody for being here and for taking a few minutes of your very busy days to learn a little bit more about sustainability and then how it shows up in the stock market game. So we're going to start quickly by just going over what we're going to talk about today. I have a few brief pieces of information around the history of sustainability, where the term comes from, what the original purpose was of creating a sustainability movement. There's a lot of jargon that's involved with the world of sustainable investing, especially as it pertains to finance and the stock market game. And so I'm going to be going through what some of those words are that you might encounter both in the game and also while your students are researching sustainable companies. We'll then walk you through what sustainability looks like in the actual stock market game simulation. As many of you may have known from some information you've received from your coordinators and from our National Stock Market Game Director, we've partnered with a sustainable investing firm named NewDay. They're going to be the ones providing us with the data on whether in their world of metrics, a company is sustainable or not. And so I thought I'd spend a little bit of time explaining how they come up with that score. And finally, we've provided a bunch of additional resources for you guys around both sustainability for your students to use as a starting point to research the topic and ultimately understand what companies are doing to be more sustainable, but also a few places where all of the information you'll see in today's webinar, you'll be able to go back and send students to directly. Then we'll end up with any questions. If you have questions along the way, you're welcome to put them in the chat. Vinny's going to be monitoring the chat, and he'll be able to answer whatever he can via chat directly. And then at the very end, if we haven't already covered it in the webinar, we'll be able to take those questions in the whole forum. Great. So in terms of the history of sustainability, it starts back in 1987. The United Nations asked a commission, the former World Commission on Environment and Development, to create a global agenda for change. Their ultimate purpose was to say, look, we're all on this world together. We all have a future that we need to preserve for generations to come. And so we need to figure out how we're going to get there, and in a way where we're not using resources today that will be depleted by the time our future generations get to it. So you can see here, they coined sustainable development as a term back in 1987, and they defined it as sustainable development seeks to meet the needs and aspirations of the present without compromising the ability to meet those of the future. If you want to hear or learn a little bit more about what was incorporated in this report, you're welcome to, you can Google it. The reference is also in our footnotes. It's a nice read about what the United Nations and all of the countries of the world were thinking about when things like environmentalism and climate change were first starting to become commonly used phrases. Fast forward to the year 2000, the UNESCO, a part of the United Nations, came together and decided, you know, sustainability is more than just the planet. Many of you may have heard terms like people, planet, and profit, triple bottom line. There's a lot more to what happens in our world than just what happens to the environment. There's issues of social justice, corporate governance, how governments are operating. And so they expanded the term sustainability to include other topics like human rights, social justice causes, and they created something they called the Millennium Development Goals. It was basically a blueprint to say, in the next 15 years, these are the 8 most important things that we as a world need to solve in order to meet the needs of the world's poorest people. And you can see those on the screen here. Again, there's a link to where this information is in more detail at the end of the presentation. But you can see some of the common themes that are in popular media nowadays, universal education, maternal health, environmental sustainability, and they gave themselves a 15-year sort of goal to try to meet as many of these needs as possible. As you guys can tell, 2015 has already passed, and we are one step closer to meeting some of those goals, but obviously have not met all of those goals. And so when the UN came together again in September of 2015, they renewed their commitment and they decided to expand their goals to be more specific. And that was based on some feedback that they got from nonprofits, foundations, government agencies that were sort of working to solve some of the world's hardest problems, and realized that the 8 goals from before were a little bit too broad and a little bit too general and vague for them to actually be able to create deliverables around it. And so they created what they then termed the Sustainable Development Goals, the SDGs, you'll often hear them called. They expanded to 17, and they put them in order of what they thought was sort of the most important way that they could meet all of the future challenges of the world together as a whole. They also gave themselves a 15-year deadline, so these goals are meant to be met, if at least partially, if not fully, by 2030, and they'll meet again in 2030 to see how far they've made progress on any or some of these goals. So a lot of this, as I've talked about, has involved governmental agencies and the United Nations. Now, obviously, there's a whole world out there of private corporations that have a part to play in sustainability. And so most recently, actually, the UN announced something called the SDG Impact Initiative, and they have a whole team of folks actually here in New York working to sort of channel capital and private investment from financial firms, from larger companies, from anybody in the private sector really, in helping governments and supporting nonprofits and agencies in reaching these goals. When you shift that into the private sector, and specifically into the finance and capital market sector, which is where a lot of you intersect with us in the stock market game, you'll see a lot of different terms. So we're going to delve into some of the terms that are very commonplace if your students were to type in sustainability or sustainable investing into the Google search bar. These are some of the things that they would see pop up. So first and foremost, you'll hear the term ESG. ESG stands for environmental, social, and governance practices. It's basically a way of looking at an investment from the 3 different arenas that the UN has sort of coined are important for sustainability in the long run. When somebody is looking to be an ESG investor, what they're looking at is they're looking at their existing portfolio of companies and investments, and they're thinking, okay, these companies, do they have a social consciousness to what they're doing? Do they fall within the realm of high levels of environmental stewardship? Do they have, are they doing okay in terms of social justice and equity issues? And is their corporate governance transparent? Ultimately, the goal of an ESG investor continues to be financial. So if the answer to some of or any of those questions is no, maybe they could be doing better, that doesn't necessarily mean that an ESG investor would take that company out of their portfolio. They would just consider whether or not the ESG factor is an additional bonus to having that company continue to be in their portfolio. As time went on, there were a lot of folks, and as sustainability has become a more mainstream topic, and lots of things have affected not just the world, but the connectedness of the world, like Facebook and the way that news reaches us a lot faster, and smartphones and so on and so forth, people started to want to be more proactive. So if you're an investor and you find a company in your portfolio where the answer to one of your ESG questions isn't necessarily positive, you can take it to the next level and do what we call socially responsible investing. Often it's called SRI. Sometimes it's intermixed with the term sustainable investing. And what an SRI investor is looking at is they're taking it one step further and saying, if a company answers no to one of my ESG filters, let's say there's a company out there that's doing really well and selling a lot of products and financially very successful, but in doing that, they are using child labor. If you are a socially responsible investor, you are going to take it to the next level and say, you know what, I don't believe in child labor. I'm going to take this company out of my portfolio, despite the fact that they are profitable, because I do not, in principle, believe in child labor. So while social returns become an important piece for the SRI person, an ESG investor would really only care about the financial returns. The SRI investor is looking at the financial return and also adding the social return on top of that, and ensuring that their investments aren't going against what their own personal values and belief system tells them they should be doing. The next level you can go beyond that is to say, you know what, I actually am going to put financial returns and financial performance off to the side for a little bit, and I'm actually going to look for companies that are in line with my own value system. And the purpose of doing that means that eventually my money, wherever I place it in a company that I think is impactful and in line with my values, is going to, in the long run, give me the financial return because they're doing what is right for society and for the world at the very beginning of their motivations. And this is called impact or thematic investing. A lot of times this used to, in the old days, be something that nonprofits did. A lot of times it was like associated with philanthropists who sort of had quote unquote money to spare. But nowadays it's actually become very mainstream. And the thought process behind it is that if you invest in a company who has at the forefront of their daily operations principles ESG factors, environmental, social, and governance factors, then the consumer and ultimately the folks like you and I that are buying their products and services will find that to be a positive attribute, and it will ultimately lead to positive financial returns as well as the social returns that were the original intention of the company. And so impact investing is what I like to call sort of the wave of the future for sustainability in the finance and capital markets, and it's starting to have a lot more popularity, not just in the philanthropists and the nonprofits of the world, but in the mainstream retail investors as well. And as investors and consumers demand more of financial companies and of companies that are actually available for investing, this will become more and more mainstream. So for those of you that are actually looking to sort of explain this on a spectrum to your students, we've provided a link here to where you can find this infographic. I actually found it in a Forbes article that was talking about ESG. We have a link to that article at the end of the slides as well. And this really helps sort of look at impact investing across the spectrum of whether you're looking at financial returns first or social impact first. And as you can see, impact investing is an attempt to be squarely in the middle of them. So you're not just giving away money because you care about a cause and not necessarily about getting your money back, but you're also not just putting in money to get money back without caring about the social cause. It's a nice intersection of where both of those worlds collide. Great. Cool. So I'm going to hand it off to Sarah now, who's going to talk a little bit more about how sustainability shows up in the stock market game.
Great. So within the sustainability and stock market game, we wanted to make sure that we're equipping you with everything that you need, including starting always with resources. So within the Teacher Support Center, we've created a sustainability lesson, which will include, as it does with all of our other lessons, a teacher background. You'll find activities, you'll find objectives for that particular lesson, and it's all linked. It's called What is Sustainability? You can actually access it via the PDF file within this webinar. It's one of the handouts that are available, and if you log into the Teacher Support Center, if you've already registered, you can simply also put sustainability into the search bar and it'll pop up that way as well. It is available for elementary, middle, and high school students in grades 4 through 12. So feel free to peruse the lesson and get the entire background and get your students involved. You also are able to view all of the sustainable stocks and a full listing of them within the student portfolios. So once your student or yourself logs in and accesses their portfolio, if you go to the Resources tab found at the top of the portfolio screen, then the drop-down menu, you will see a section that's called New Day Sustainable Stocks, as seen on the left-hand portion of our screen. and it will pull up a list in a separate window of all New Day sustainable stocks. You can also find a link to sustainable stocks via the trade screen. So when you are entering a trade, also from that trade tab that can be found at the top of the portfolio page, you will see a link within the enter a stock trade option where you can also access the full list of New Day sustainable stocks. What's really great when a student or participant, because it can be a teacher or a parent or an individual as well, decides to make an investment and make a transaction from a sustainable company, they will receive an account status message right within their portfolio the next day. So as you see at the bottom there, you'll see a great news, New Day rates, insert company here, a sustainable company. So they'll be able to, so as long as that company exists within their portfolio, you'll have that message available to you. And if you are potentially investing in multiple sustainable companies, you'll continue to see that message. It's really great. It's a really great opportunity for you to see what you're investing in real time, and then you're able to, it's more bragging rights if that is something that you want to focus on within your classroom. But I'm sure one of the major questions, though, is when you're looking through these lists and you're seeing what the companies that are there, or rather sometimes are not there, it's even what are the credentials and what's necessary in developing this number? What criteria was New Day using to even come up with this list? So we wanted to explain that as well.
Great, thanks, Sarah. So as Sarah mentioned, New Day is one of the folks that we have partnered with. And I want to just mention, as you can see from the footnote I've added in here, that this list is not meant to be exclusionary. There are many companies out there, a lot of financial services firms that you've probably heard of, many rating agencies who have actually taken sustainability and ESG factors and created their own scoring and ratings metrics. It is a growing industry, so similar to how companies themselves are starting to figure out how to be more sustainable in a variety of different ways, financial services firms are also trying to figure out how to incorporate that when they're looking at a company's value. New Day happens to be a company that partners with us directly. They offer this information to us so that our students can have access to this. And also because they're a company that is trying to bring sustainability to retail investors like yourselves and myself, so that it's not necessarily something that is specifically for high net worth individuals, but rather is something that anybody can access. And so I'm going to talk a little bit more about what they think about when they're scoring their companies. So just like most financial firms, they start with the entire universe of investable securities. Now, in New Day's regard, they're looking at 3,000 of the largest middle-sized and small companies from around the globe. From SMG's perspective, we've actually filtered it, as you guys might know already from reading the rules. We only trade stocks that are on the NYSE and the NASDAQ stock exchanges. So our filters within SMG will take the New Day universe and only look at the companies which our students are able to trade within their portfolios. They then go on and they say, okay, what are some of the impact themes? We've mentioned some of them already in this webinar that we think are important. So examples of impact themes would be gender equality, ocean conservation, animal welfare, fair labor laws, and fair trade. Those are some of the themes that New Day is looking at and that are often themes that come up when you're thinking about any of the three kinds of sustainable investing. They then go and look at the list of companies that they've narrowed down that have some sort of impact theme in their operations, and they say, okay, which of these companies might be doing something that is impactful, let's say in gender equality. Maybe they've offered better maternity leave rights in the United States where other companies may not have that. But the company itself is involved in something controversial. Examples are listed here like alcohol, firearms, or tobacco. Maybe they've had some negative headlines recently because of a variety of different reasons. So even if the company is involved in an impactful theme like gender equality, if they are doing something that could be considered controversial and not necessarily a positive in terms of the world and our environment, they would then be discluded via the negative screen in the impact score for New Day. They then take the list of companies that are left and they assign them a sustainability rating. They basically look at the three things that I mentioned when I said ESG, so environment, social policy, and executive transparency, which is part of governance. And they say, okay, of these companies, let's say there's about 500 companies left, which of these 500 companies are doing really well in one of these three places? Maybe they've rolled out transparency from their executive compensation structure. They're doing more for diversity and equity inclusion in their staff, and they've started a new recycling program across all of their offices. So this company is actually doing really well in terms of its sustainability rating. The final filter that they add is what they call an impact score. So a company could have a very high sustainability rating because they are doing things across all three pillars of ESG. However, compared to, let's say, another company that's doing something similar, for the first company, it's a forethought and maybe a way for them to check boxes so that they can make their consumers happy, versus the other company where they're actually doing it because they believe that it is a positive contribution to the world and the environment. And by doing so, they're not doing it just to check a box, but because it's part of their intrinsic value proposition and intrinsically part of their day-to-day operations, because they truly believe in it and it's a part of their value system as a company, just like it's a part of our value systems personally. And those companies are the ones that New Day is looking for to have a high impact score. So when you think about the New Day scores and the list of companies that you see provided by New Day within the stock market game, those are companies that have the highest New Day scores. Just because a company is not on that list does not mean that they don't have a high sustainability rating or that they are not a sustainable company. They may well be doing things that are sustainable, but in the New Day method of ranking companies, as is shown here on this slide, they don't have as high of a score as other companies. And in light of us first bringing this to our students for the first time, we asked that they sort of keep that list in a manageable number so that students have a nice place to go where they're not looking at 1,000 companies, but just, the first 100. And when students actually research these companies, they'll actually see a lot of really positive, impactful news around what these companies are doing for the environment and the world. So that's actually the end of our webinar. As I mentioned earlier, we do have additional resources for you from the United Nations. There's a lot of associations out there where impact investing and sustainable and responsible investment, there's loads of resources on all of these associations' websites. If your students do a Google search for a lot of these places, these are a lot of the articles that will come up towards the top. The Forbes article is especially good. It sort of shows you in depth the detail of ESG and how it's worked over the last 25 to 30 years in terms of a history and a timeline. And then at the very bottom, there are some links to all of the, specific pieces of information that you've received in this slide deck. So with that, we thank you very much for your time. I know that it's at the end of a very long day, and so we appreciate you taking the time to spend with us. Our contact information is up there for myself, Sarah, and Vincent. We're always happy to answer questions right now. You can put them in the chat. But if you have a question afterwards, you think about it later, or while you're delivering sustainability in your classroom, please don't hesitate to reach out. If you can't find this slide deck, you can definitely reach out to your local SMG coordinator as well, and they'll make sure to get the message and an answer for you.
Perfect.
So with that, Vinny, I'm gonna let me know if there are any questions.
We have a question from Gary who asks, how do companies game the New Day system?
How do companies game the New Day system, as in manipulate?
Yes, that's what Gary means.
Okay, sure, I'm happy to address that. So I'll go back to the slide in terms of the New Day score. As I've mentioned before, there's a couple of things here, Gary, that make it actually really difficult for a company to quote unquote game the system. First and foremost, a lot of these companies are publicly traded companies, and in order to be publicly traded, you have to file your annual reports to your shareholders as well as to government regulatory agencies. So in the United States, that would be the SEC, the Securities and Exchange Commission. The exchanges themselves, both the NYSE and the NASDAQ, have very stringent rules around reporting for companies. So it's very difficult to say you do something and then hope that nobody figures out that you're not doing it. Similarly, it's also very difficult for companies to hide things, right? Like we would hope that given media right now, and just all the things happening in the world and how connected we are through media and smartphones and social media, that it is actually really difficult for a company to hide if they are doing something negative. Also, as I've mentioned before, NewDay isn't the only company that's out there looking at all of the publicly tradable universe and looking at them from an ESG perspective. I don't remember the exact number, but I think it's definitely more than 50% of both retail, which is mom and pops like you and I, and institutional, which is just larger firms. Investors are actually demanding that ESG be something that all of their financial companies and their financial advisors report on when they're reporting their portfolio returns. And so the industry as a whole is actually thinking about how to look at all of the different rating agencies that are out there and ensure that if a company looks like they're sustainable from the NewDay portfolio, are they actually sustainable from one of NewDay's competitors that actually also does ESG ratings? So while we have chosen to partner with NewDay and provide this piece of information to our students through SMG, when our students research companies, they will find a lot of other companies out there like Moody's, Morgan Stanley, UBS, that has their own internal ESG ratings, all of which are confirmed and sort of validated by the global regulatory agencies that exist that confirm that publicly traded companies are in fact either doing or not doing the activities that they are reporting out to all of the folks that are looking at their sustainability metrics.
And I'll just use this opportunity also to remind all of those who are listening. We hope that a number of you are already participating in the stock market game and having your students invest in stocks, bonds, and mutual funds. But in the event that you have not yet registered, you can register for a session at any time. We have windows, 2 game sessions every semester in the fall and the spring, and a session that operates throughout the entire academic year. So feel free to register at any time online at www.stockmarketgames.org.
Great. Vinny, if there's no more questions, we can wrap things up.
And I don't think there are.
Great. Well, I'll just end here by saying thank you again for spending a little bit of time with us and learning a little bit more about sustainability. I put the contact information slide back up for anybody that wants to do that. Again, they're also available in the handout section. And if you can't find any of that, just reach out to your local SMG coordinator and they'll be sure to get the questions to us and we'll get them answered right away.
Thank you, guys.
Thank you, everyone.
Have a great week.
Thank you and good night.